Hello everyone, investment scams rampant. Please vigilant and discerning. Do not trust information from unknown sources. Please make sure recognize two official Capital Securities community, Facebook, Capital Securities, YouTube, Capital Wealth Insights.
Hello everyone, welcome to Chuani Good Night. Today is Wednesday, October 8th. I'm Huang Pingrui, and we'll be discussing a few topics. As for now, we saw a bit of a pullback in the stock market yesterday, mainly due to the news about Oracle. Let's take a look at this news. At the moment, the stock market seems to be experiencing a normal correction, and the outlook for AI remains unchanged. In addition, the government is still in a shutdown situation. As for the situation in the US, the Republicans know that both sides are at a stalemate, which we've discussed many times. However, it seems that the longer the government shutdown drags on, the more it will negatively affect the Republicans. So this suggests that the shutdown probably won't last too long. It shouldn't drag on for too long, so it should be resolved soon. It could end very soon. There's a chance it could be over as early as next week. Alright, that's the schedule for this week. As for tomorrow, we can take a look at the Fed meeting minutes, which should reveal a lot of information. We'll check it out then. Currently, looking at the US dollar index, we can see that it has actually rebounded. This is mainly because the US government is currently shut down, creating a data vacuum. So right now, there aren't any economic reports for the dollar to react to. In addition, other non-US currencies have been depreciating accordingly, so this has, in turn, pushed the dollar higher. As for how long this situation will last, we'll have to keep monitoring it. Now, looking at bond yields, it seems like they're showing signs of consolidation at the moment. Since September. After rebounding from the lows in September and reaching a new plateau, we're starting to see some movement here. It's basically fluctuating within a narrow range here. This is the situation for the 10-year bond, and it's pretty much the same for the 30-year as well. You can see that after rising from a relatively low level in September, things have started to stagnate here, without any clear direction. It was the same situation 2 years ago, as we mentioned. Right now, the market is still reflecting expectations of 2 rate cuts by the Fed before the end of the year, so in the absence of any significant stimulus, the current situation probably won't change much. Alright, next let's look at changes in the stock market. You can see that overall, the stock indices fell yesterday, so what's the situation with this decline now? It looks dangerous, but actually it's not that bad. For the S&P 500, it's still some distance away from the 20-day moving average. It's about the same situation for the Dow Jones as well, so overall things are still okay. Even though the drop was relatively large, the technical indicators still look alright. The overall trend is still upward, and for the Nasdaq, although it also dropped quite a bit, it was already quite far above the moving average before. So even though it fell a bit more, it still looks okay. So what's really going on right now? Let's take a look at the latest news. Looking at the global side, we can see that the US has suspended diplomatic exchanges with certain countries for the time being. Recently, as we know, the issue of drug trafficking or smuggling in the US is very serious, and there are a lot of people in the US who are struggling with drug addiction. So after stepping in, they want to tackle this issue because they believe that this problem seriously affects the development of the United States. If the source or the place where these drugs are produced is in Central and South America, then there are certain areas involved. That includes Venezuela. Now, actually, Trump has already carried out airstrikes near Venezuela, targeting ships suspected of drug trafficking. Next, they're considering cracking down on drug trafficking hubs on land in Venezuela, but attacking these land-based hubs would essentially be an attack on a sovereign country. So actually, the underlying meaning of Trump coming to power is that he wants to make America great again. This means the US wants to pull back from global military interventions and focus on handling its own domestic affairs. From what I see now, although the situation itself is a domestic American issue, but it's starting to involve foreign countries. This is something worth paying attention to whether the US, in its subsequent military handling, can just declare victory here on its own and then bring this matter to an end. And then moving forward, whether the US will shift its focus to other issues, or if it will really continue to ramp up its intervention in the UNLR, these are all possibilities. Because right now, actually, Venezuela itself isn't just sitting idly by, it's making efforts, taking different approaches, and trying to respond. For example, these drug lords, they've declared war and even sent troops to their deaths. They've carried out some raids and searches against them, but it seems like the US still thinks they're not doing enough over there. Plus, the US believes that Venezuela's current president, Maduro, is still a top drug lord. even though Maduro himself is? He claims that he has absolutely nothing to do with this drug trafficking. So for now, we can just keep an eye on how this situation develops. Because from this incident, we can see what the US position on Venezuela really is, and whether it can truly focus more on domestic affairs as it previously claimed. On the other hand, if the US really does strike some targets on the ground in Venezuela, that would mean an infringement on the sovereignty of another country. So, moving forward, we can also watch how the international community reacts. Alright, so that's the latest on the US government's actions. Now, so overall, under the backdrop of a potential government shutdown, some differences have started to emerge, mainly between the White House and the Republicans in Congress. As we all know, the government is divided into the executive and legislative branches, and right now, the situation is that the Republican Party holds a slight majority in both chambers and is also in power, so at present, the situation is, on the White House side, they are more focused on the idea that, even if the government shuts down, these essential functions cannot be suspended. However, they haven't talked about large-scale layoffs yet. Meanwhile, the Republicans are saying that discussions about healthcare must wait until after the government reopens. So right now, it means that Trump believes healthcare can be discussed first, but salaries absolutely cannot be paid in advance or retroactively. On the other hand, the Republicans are arguing that these wages should still be paid retroactively, because these federal workers are serving the country and deserve their pay. But as for healthcare, today, the negotiations are about discussing it after reopening, so their positions or priorities are not aligned. So if we look at it from the perspective of congressional Republicans, what is their strategy? Their strategy is actually quite simple. If they set aside the White House, their main move is to put pressure on participating Democrats. Because right now, House Republicans are in the majority, so they can easily pass bills in the House. But to get a bill through the Senate, they need the support of at least a few Democratic senators. Right now, because there aren't enough Democratic senators supporting it in the Senate, this government funding bill has been unable to pass in the Senate, so that's the current situation. The Republicans' position in Congress is to quickly put pressure on you, so that the Democrats involved can pass this bill, and then the government can reopen. Once it reopens, they can discuss the follow-up issues, and they can also blame the Democrats involved for the shutdown, saying it's because they didn't pass the bill. However, as for the White House, they have other ideas. They want to use government officials to punish their political enemies and also want to reform the way the federal government hires and operates. So what they want to do is much more, and that's why you can see this situation now. The two sides, yeah. As for legislative action, there is a situation where their priorities and goals are not aligned. For the Democrats, they are more focused, mainly concentrating on healthcare. But actually, the Republicans are under pressure, because there are elections next year. As we mentioned yesterday, most of the states most affected by healthcare are red states, meaning states governed by the Republican Party. The situation with the internal split has already been reported in the news, and the Secretary General is also aware of it. So the Democrats are even more confident in sticking to their position and are less willing to compromise. Right now, it looks like the Republicans will either have to change their stance or start compromising with the Democrats. We'll keep watching how things develop in Congress. Next up, we've also seen recently that Trump has been sending the National Guard to more and more cities. So now it's Chicago. Previously, he wanted to send the National Guard to Portland, but that was rejected. After being rejected, they said he was considering invoking the Insurrection Act. But for now, they're saying there's no need for it. So why is there no need? Actually, he really wants to do this, and he's mentioned it many times, especially during last year's campaign events. He often brought up that he wanted to invoke the Insurrection Act. But right now, it's actually because currently, the deployment of the National Guard is considered illegal because it was ruled so by a local court judge. The judge's ruling was that there was no legal basis for it. Now, Trump believes that since most of the Supreme Court justices were appointed by Republicans, there's a good chance that the Republicans could win in the Supreme Court. So, he thinks he will win, and for now, there's no need to invoke this. But this is basically a plan B. If he loses in the Supreme Court, or if there are other factors that prevent him from actually deploying troops to suppress unrest, or sending troops where he wants, then he might still resort to this Insurrection Act. As for this thing, actually, it's a dividing line, because if he really invokes it, it means he's exercising his authority. To the extreme, because this power is granted to the president, and his authority in this regard is relatively broad. If the president really does this, since in several previous instances he didn't go through with it, and his advisors advised him not to do it, if he ends up doing it anyway, then we can see if there have been some changes in the political situation. Right now, the White House is also saying that local courts must abide by the law. Okay, this is a unique power held only by the president. So from this statement, we can also see that the current administration believes that, since they are democratically elected, they have a mandate from the people. Therefore, they feel justified in exercising the powers available to them. That's their perspective. So, you can't really blame them for this mistake, but still, are kind of taking this idea to an extreme, because after all, the president is only elected once every 4 years. It's not like there's a constant update from public opinion polls or regular feedback from the people. So, when it comes to this, everyone actually handles it a bit differently. But for now, the US government is relying on the so-called mandate from the people in its jurisdiction, and there's actually a pretty strong sense of confidence here. Bloomberg also mentioned that, although the core functions of the US government can still operate for now, if the shutdown drags on, the longer it lasts, the more its diplomatic influence, as well as the credibility of its trade enforcement in various government agencies, and public confidence in the government, will all gradually weaken. Alright, next I want to look at the market situation. The biggest and most important pitfall yesterday was that the information reported, citing internal documents, which should be from Oracle, that Oracle's cloud rental business has a gross margin of about 14 to 16%. So, about this matter. He told me that this is way too low, and it's also below the expectations of many analysts, and even lower than the market's estimates. This figure is also much lower than the typical gross margin of software companies, which can easily reach 70 or 80%, so he thinks that this kind of thing is extremely hard to make money from, and it's also very difficult to survive. That's why the market has started to get a bit nervous. But as for this gross margin, the way it's calculated actually varies from company to company, and many companies don't even break out the gross margin specifically for their cloud rental business. It's probably because a lot of different costs are bundled together, and then they report a combined gross margin, without specifying what the gross margin for each part is. So, for example, when we look at companies like AWS or Google Cloud, their businesses are more diversified and spread out. Their overall business might be in terms of cloud leasing, it's also relatively competitive, but they have other high-margin businesses that can offset these, so when you look at their overall gross margin, it might not seem too bad, or it might even look pretty good. So that's the current situation, and that's how things are right now. The current conclusion is actually very clear. Oracle is a latecomer in the cloud services sector, and at present, it doesn't have much capacity. So it has to rely on aggressive low pricing and active expansion. This is the current situation as it tries to increase its market share, so accordingly, during this process, its gross margin will face some compression and pressure. If it really manages to succeed in the future, its gross margin will rebound. This is a relatively clear scenario. So this is the current situation with Oracle. In addition, as we just mentioned, unlike other tech giants, Oracle doesn't have a lot of diversified businesses. So right now, Oracle is like this. Its cloud rental business already accounts for 30% of its total workforce, and it's expected that in just a few years, the cloud business will make up the largest share of its revenue. Because of this, the impact of its low gross margin will become even more significant for Oracle. So that's the current situation. This is just the beginning. So, let's see if Oracle can really keep up in the future. As the scale of this rental business expands, and with greater efficiency and economies of scale, it could help improve its gross margin levels. In fact, Oracle is hosting an event for its next generation, called AI World, which will last for 3 days. Everyone can keep an eye on what developments come out of it. Most of the time, these kinds of events are quite significant, so let's keep watching how Oracle's stock price changes afterwards. Looking ahead, you can actually see that there was a long lower shadow on the candlestick chart yesterday, which means there was a lot of buying interest coming in. Also, it seems like Oracle has been going through a period of consolidation. There's a chance that after next week, a clearer direction will emerge, so let's all keep tracking it together moving forward. Alright, next let's take a look at what's happening in the US market. Today, there are rumors that Musk's company, xAI, is raising $20 billion through a special purpose entity. That's actually quite a lot, since originally they only planned to raise $10 billion. So what about this SPB? It will buy NVIDIA chips, and then xAI will lease these chips from the SPB. In other words, the control over these chips is under the SPB, not XAI, so this is also a kind of protective mechanism for the parent company. And since XAI is leasing the chips from the SPB, that is, leasing from this special purpose entity, it has to pay for it. So when XAI pays, that becomes income for the SPB, and then that income can be returned to the investors. So this is a kind of insurance mechanism in the design. In this round of investment, NVIDIA is expected to invest $2 billion, so we can see NVIDIA's presence again. It's basically involved with every new AI startup. They all need to use its chips or this kind of computing power. In this context, NVIDIA is always present. Now, as for XAI, it's actually burning through a lot of cash every month, about $1 billion. So in the future, it will still need to raise more funds. Originally, we were going to say its valuation would go from $100 billion up to $200 billion. So in the future, it should continue to raise funds. And because it's a company under Elon Musk, Musk has also leveraged many of his related companies to invest in XAI. In fact, Tesla shareholders will also vote this year on whether to invest in XAI. SpaceX has already invested before, so that's the current situation. This is the latest example, NVIDIA investing, and then the company going on to purchase NVIDIA chips. This kind of case has happened many times over the past few weeks, and this is just the most recent one. In addition, just yesterday, a fellow analyst gave a relatively optimistic outlook. He believes that by fiscal year 2030, the company's annual revenue will. This year, there really is a 7 to 9% growth, which is higher than the previously expected 3 to 4%. In addition, the EPS will see double-digit annual growth, up to 15%, which is also above the expected 8%. This is because the Data Center Infrastructure Monitoring Division has a long-term compound annual growth rate of 11 to 14%, which is higher than the expected 6 to 8%. Looking at all this, it seems that. Let's try to see what you're actually doing in the AI supply chain. From what I see, if you're Oracle, it's basically a company that rents things to sell. A lot of things aren't their own, not self-produced, they just lease and use them. For example, ships, they rent the factories, rent the facilities, and even the equipment probably needs to be even more flexible. So, with this kind of setup, the gross margin might not be that great. What does this bring? One follow-up opportunity is that we really need to emphasize the AI supply chain. That is to say, maybe Oracle's gross margin won't look very impressive, but on the other hand, if you're making server cabinets, liquid cooling, or some heat dissipation solutions, or things like that, for companies like those in the memory business, the demand here is relatively predictable and more stable. This includes things like the need for connections within server cabinets, manufacturing and sales of cabinet connectors, and so on. It also includes companies like Dell, which is positioned in the rack assembly sector of the industry. So right now, AI infrastructure and the companies involved in it are still within the scope of what we can invest in. This is something we mentioned yesterday, and today we want to emphasize it again. Now, looking at Dell's stock price movements, you can see that Dell is gradually forming more of an upward trend, although overall it's still somewhat volatile. As for Dell's stock price, in the long run, part of its business comes from its regular operations. Its consumer electronics division, these departments have almost no growth. This part has actually dragged down its stock price, so going forward, we'll have to see how this develops. The key is whether its AI-related division can really maintain double-digit growth over the long term, and whether its revenue and profits can increase as quickly as they hope. Alright, so what we're seeing right now is, because according to Bloomberg, from a few months ago until now, NVIDIA has actually made a lot of investments, and so has OpenAI. So what exactly is the relationship between all these? You can see from this chart here that NVIDIA is constantly investing in others. The red and purple colors all represent investments that NVIDIA has made. And in return, what do they get? Basically, everyone has to buy their products. You can see the green arrows constantly coming in. As for OpenAI, it's more about them going to a lot of different parties, saying, I want to buy your services, I want to buy your computing power. You can see that the orange arrows are always going out, but there are also some coming in. Some of these are my investments, and some are hardware devices. So, at present, you can see that the overall AI ecosystem is becoming more and more complex, and increasingly so. It's all interconnected, like a chain where each link is tied to the next. As we saw yesterday, if any part of this chain has issues or something goes wrong behind the scenes, it can put significant pressure on the economy. That's even the situation we're facing right now. You can see that in these collaborations, the amounts involved are actually very large, often reaching tens or even hundreds of billions. If something like this were to happen as a single isolated incident, It might be a huge news story, but right now, it seems like people are relatively indifferent to these things. That's because these collaborations are happening more and more often, and on such a large scale, so everyone seems to have gotten used to it. But in reality, each of these collaborations is actually a major news event in itself. So, looking at the current situation, the concerns are increasing. Every time I mention that from this point on, we might start to see more volatility, and that the worries will also increase. That's the situation we're facing right now. Actually, our company is in pretty good shape. Their balance sheet and financial structure are solid, and their cash flow generation is also very strong. There really aren't any issues, and they're making good profits. But right now, it seems like they're spending money really fast, so there are actually some risks involved. So right now, we might be in the middle of a huge transformation period. If this works out, it could be one of those once-in-a-lifetime opportunities that only come around every few decades, or maybe just once in your life. But if it turns out to be a big letdown, then everyone might just end up with nothing, or even worse, face major losses down the line. If it turns out that this part is all for nothing, then honestly, we can see from the structure of AI companies, plus the actions and investments of companies like OpenAI as representatives. Take OpenAI, for example. Last year, they participated in 52 startup investment deals, and by the end of September this year, they've already made 50 investments. These startup investments are happening at an incredible pace and scale, much bigger than what you usually see with traditional venture capital. For a typical year, making more than 10 investments, or even around 10, is already considered impressive. But OpenAI, as a tech company, is able to make so many deals and investments, which shows just how aggressively it's working to solidify its position in the industry. So now, the question is, why is everyone being so proactive about this? Whether it's scrambling for computing power or securing resources, we can see that a lot of applications haven't even emerged yet. But all this preparation right now is actually to reserve capacity for things in the future that we don't even know about yet. Right now, we believe that AI will see tremendous growth and that there will be many changes ahead, with breakthroughs possible across various industries and applications. However, at this point, we still don't really know which things will mature, what breakthroughs will actually be achievable, or what can truly be done. But we do know that this is the direction we should be heading in. So, in this context, because this industry, or rather, the business world, is relatively competitive, if you have access to this computing power and I don't, then no matter what opportunities arise in the future, you'll be the one to seize them first. So, in order not to fall behind or to maintain a competitive edge, there's a strong incentive for companies to scramble for these resources and seize these opportunities. After that, what we really need to look at is maybe applications will eventually find ways to meet these demands, because just yesterday we saw that OpenAI held its developer conference, right? And during the event, they touched on a lot of tech topics, mainly software stocks. But actually, software stocks tend to have long upper wicks, and for now, these things seem to. There still isn't really any truly new application. Most of it is just things we've already been doing, but now putting them into ChatGPT, or using ChatGPT or GPT to make them better, or like these AI agents, which can be more effective. But whether these AI agents can really fill this huge demand for computing power is still something everyone needs to pay attention to. So for now, what we can do next is look for opportunities to address this, basically, to prepare for the significant growth in computing power and get ready for these future uses. So, what are these uses? Because whether there are companies that can provide for these uses and do a really good job with them, that could be a direction for the future. As for now, well, this afternoon while I was preparing, Mastermind said that this pullback might continue in the short term, and there's a chance it could stabilize when earnings season data comes in. Only after that will these concerns subside. So for now, it looks like there's about a week's time. Actually, right now, since the government and official media are still keeping up their efforts, even though this stock actually rebounded a bit in pre-market trading, the rebound was relatively weak. So we'll have to see if the momentum can continue after the market opens. Then let's see if there can be a more noticeable rebound in the next few days. If not, it's actually quite likely that starting this week, we'll see more volatility, and individual stocks will continue to perform based on their own specific news. Alright, so there are actually a lot of voices discussing the current stage and position. What we can see is that one question is, to what extent can history represent the future? Because this was the dot-com bubble in 2000. After that bubble, there was a significant drop. Do we really want that outcome to happen? Actually, we don't want to see a major drop like that. What we prefer is maybe a rebound, or at least for things to just stay flat around here, and then Some individual stocks might perform in a certain way, but you wouldn't really want, nor would you hope, for the stock market to actually crash at some point. So right now, you could say that our current valuation level, even though it hasn't reached the absolute peak before the dot-com crash, but it's actually not low either. So everyone is just staying increasingly alert. At the moment, we're actually seeing a lot of. The suggestion here, as we've been mentioning, is that you need to rotate your funds quickly and react quickly as well. That way, you still have a chance to keep participating in this market trend. Alright, so at the moment, we're actually seeing another signal for a pullback. This time, if you look at it now, when the implied correlation index for the S&P has dropped to a certain level, there have often been more cases of the index declining afterwards. So right now, that level has been reached again. So will it be like the previous few times this year and see another drop? That's something we can keep an eye on. Another thing is that right now, there's also a reason related to expectations. There's a self-fulfilling effect. For example, if there's a temporary bubble, the market sentiment or concerns might increase a bit, and that could indeed lead to a slight pullback. But as for the current situation, is there still any opportunity in all of this? What I've noticed is that, actually since April, the S&P Global Clean Energy Index has performed quite well, because as we've discussed, the main focus is probably still on AI and energy. We've talked a lot about energy, including traditional energy and wind power generation, or things like natural gas power generation, turbines, and nuclear energy, and so on. So this Clean Energy Index has actually been performing quite well, which seems a bit ironic, because didn't Trump want to crack down on wind and solar energy? So why is the energy sector doing well? Actually, most of the companies in this index are the largest American companies. Among the American companies, there's B and also Aura, which we'll talk about. We've already introduced B before, so today let's talk about Aura. Aura is actually one of the component stocks in the index we just looked at, and it's a publicly traded company. Aura refers to Ormat Technologies, which mainly focuses on geothermal power generation. Currently, its power generation capacity is 1.6 gigawatts, and by 2028, it's expected to nearly double to around 2.6 to 2.8 gigawatts. At present, the company mainly generates electricity and makes money from power generation. Occasionally, it also develops some energy storage products, and in addition, another product they offer is building power generation equipment or installations for clients, and they charge fees for these services. This company is actually a leader in its field, and it has been operating for a long time. Secondly, it's a rather unique presence because it provides stable energy, and it's a type of baseload energy. It's also one of the energy sources currently promoted by the Trump administration, as well as by the current Secretary of Energy, Chris White. So, it occupies a position that is clean, stable, and officially supported by the government. Yes, there are indeed some favorable policies for it, and corresponding subsidies are also likely to increase. So, this company is already a mature geothermal company, and it has geothermal power plants in many locations. At present, it continues to sign power purchase agreements, and it is also capable of providing a full range of engineering and procurement services. At present, we also know that policy is a very important factor, because for these new energy sources or those that require significant capital investment, government support is often necessary. Right now, actually, it's also because the government has stepped in. But after this OMAR technical phase, the overall development of the sector will have more room to grow. Now, there are also some tax breaks, and these assets can also be traded. So, the company is expected to. He said that in the future, the company can generate $160 million in annual tax-exempt income, while also achieving a tax reduction effect of 5 to 15%. Additionally, overall, when it comes to data centers, what they want is to get electricity quickly, and they also have some clean energy requirements, so geothermal energy is actually a direction for future development as well. The company will hold its Q3 earnings call on November 4th. Currently, in the Greater China region, the company is profitable and the outlook going forward is relatively stable, and overall, the growth rate is in the high single digits. As of now, it is. The current order book is also quite good, and in fact, this segment has double-digit growth, 59%. These orders can be converted into revenue within the next 2 years. Right now, as we can all see, electricity prices are rising, so in the future, the company will also benefit from the demand coming from data centers. And this will drive up electricity prices, because many of its Most of the contracts are long-term, so these long-term agreements can lock in their profits and ensure that their future performance continues to show a steady upward trend. This company also has no issues with its operations, and its cash flow is quite abundant. So, to add, the average electricity generation price in the US has actually seen a noticeable increase since 2021. Now, when people talk about it, it's all above, well, the NW is over $100. And if we look at this company, it's actually an industry leader. You can see that, globally, Omar Technology ranks number 1. We mentioned before the company called Calpine, which was later acquired by Constellation Energy, and its ranking is somewhere in the middle. If we're talking about the first one itself, Omar is a large company, so overall its outlook is relatively stable. Over the next 4 years, its revenue is expected to see double-digit growth, and revenue will continue to grow significantly. The capacity is also projected to achieve double-digit growth, and in terms of profitability, it's expected to see high single-digit to low double-digit growth as well. Alright, so as for its current stock price, it's also relatively stable. There hasn't been any obvious surge. For example, a few months ago it was around $90, and now it's just over $100, so overall the increase hasn't been that big. There is still some room for growth in the future, so everyone can keep an eye on this stock. Alright, next let's take a look at the pre-market strong and weak performers. So let's choose from here. On the S&P side here, for the gainers, there's CG, which seems to have some upgrades at the top, and then companies related to gold like NEM are also up. NEM is actually worth considering, because if you want to invest in gold, this is one of those companies. If you don't know what to invest in, or if you think the gains in real estate and gold aren't that big, you can invest in NEM. Its price movements are actually much more lively compared to gold itself. UNH has also seen a pretty clear increase. Next up is Dell.
Now for the stocks that are dropping. It looks like some of them have been downgraded. Let's check the volume.
So that's roughly the situation in the pre-market right now. The main tech stocks are showing a slight upward trend. Stocks like Nvidia, Tesla, AMD, Amazon, and Micron, most of them experienced a pretty noticeable drop yesterday, so we'll have to see if, after the market opens, they can maintain this upward momentum we've been talking about. We'll have to see if they can recover yesterday's losses. Let's keep an eye on that going forward. Now let's take a look at the overall situation. At the moment, you can see that stock rotation is still happening pretty quickly. Some small cap stocks are actually seeing pretty big gains. As for the stocks that have already gone up a lot before, it seems like their momentum isn't always as strong now. They might not rise much, or could even see slight declines. So everyone is closely watching the current market trends. Alright, that's all for today. Good night, and thank you all for watching.
Our company has no improper financial interests in the individual securities recommended or analyzed. The information in this program is for reference only. Investors should make independent judgments, evaluate carefully, and bear their own investment risks. If you don't want to miss the latest market updates, be sure to turn on the notification bell and hit subscribe. In addition, we have plenty of great video content on both Facebook and YouTube. Don't miss out. In our group, we share in-depth explanations of global financial events with you every day.